Continue.
Good morning, everyone. How you doing today? Michael Zuber, author of One Rental at a Time, and it is Wednesday, and we got the legend Matt, the mortgage guy, with us. How you doing, buddy?
Always a pleasure, man. I'm doing great.
That's awesome. Hey, one of the things I want to talk about, I think we're going to do two. We might squeeze in three topics together this morning. Is I want to relate to what's happening today in the crypto market. Right, a lot it's down, or at least it was down 30%, and it's fallen. This or that. But actually, I want to step back as the old man in the room and kind of like tie tea leaves together very early, very loosely to what I experienced in 2000. Let me paint that vision for you and see what you think. Okay.
All right. I'm game.
All right. So what happened to me in 2000 is I got, a little cocky in the stock market. The .com craze was going crazy and was making a lot of money. And pretty soon I went from being an investor, doing the discipline, reading the financial statements, to frankly gambling or speculating. But it worked, right? When the tide rises, even stupid decisions pay off. And then what happened is we had a washout moment, capitulation. Companies stopped existing. They went from 10s, 20s, $30 to nothing. It was just overnight. It was all gone. So what happened to me, and actually a lot of other people after the tech washout, is we moved our cash we had left to a different asset. And that asset became investment properties. And what people don't really realize is the bubble that blew up started very early after the tech or .com washout. So I'm not saying it's going to happen, but I just saw this morning and I got texts and comments from lots of people like, oh my God, I got wiped out. I got margin called. I lost everything. And I'm like, I've seen this before. What is going to happen is a lot of people that thought they were going to go to the moon with crypto, they're going to go, you know what? Crypto's risky. I don't know what I'm doing. They lied to me, pump and dump. I'm going to go somewhere else. And that somewhere else seems to be, it's a physical asset. I can see it and touch it, right? You can't touch the blockchain, but you can touch real estate. It produces cash flow. It's easier. So I don't know if it's going to happen, right? It's still really early, but I do remember quite vividly, lots of people that were all talking .com suddenly started looking at real estate. And that started a 6-year run of real estate being hot for investment. So do you remember that? Do you see that?
I remember that. And so, just to clarify it for my own brain and for anybody listening, what you're saying could be a possibility is that a bunch of people who are bullish about crypto and maybe even stock and Robinhood and kind of the newest craze of investing might get burned.
Yes.
Or realize like, oh shoot, you can actually lose here too.
Yeah.
Take that and say, I'm going to do something like real estate, because real estate's something that I can see and touch, and it's an asset, and that's going to create more demand. Which for me in my mind is like, oh my gosh, more demand. Like
exactly.
the last thing we need in real estate is more demand, but it makes sense. What you're saying makes sense. And so that's basically what we're saying, right? Is like a shift of a bunch of capital, a bunch of energy, a bunch of folks going from one asset to another.
And it's the same thing as last time. The name's just different. Last time was .com. Now it's coin. And what happens is people move their capital. They get lucky. They move more capital. They get lucky. Then they go on margin and they get unlucky. And then they go, basically what happened to me is I'm not doing stocks anymore. And again, that was wrong. On so many levels, but I haven't touched stocks in 20 years. Right. But I'm like, I'm going to take the little bit I have left. I still want to invest. I still want to do better for my family. And you go somewhere else. And usually it's something slower. It's not the wild go to the moon craze like .com or coins. So yeah, that's what I'm saying is people got crushed today. The ones that left with some money may not do it again because they realize a lot of the coins are just worthless. And they're going to go
lose 30% in one day. This isn't fun anymore.
Yeah, 30, 50%. And if they're on margin, I got a couple of texts from people that got margin called and they're out. Their entire balances.
Yeah. You want to hear interesting perspective from me, Mike, is past life. Pre-mortgage, because I've only been in mortgage since 2013. I managed a poker room, so a casino for all intents and purposes, a small poker room in Sacramento from 05 to 13. So for 8 years, I got to see consumer behavior and gambler psychology.
Yeah.
And so you talking about this makes me think, you give somebody $100 bonus for walking in your casino. You give somebody some sort of free money,
yeah,
they're going to spend it. And they're turning 100 into 2,000 is the same in the casino than it is in real life. And so I think what we're seeing too, to your point, is that you pump a bunch of stimulus in the economy. The stats prove it. The stats show it. People are dumping money into Robinhood. People are speculating and trying to run up, just like they would in a casino, $100 or a $600 or $1,400 stimulus check up to 10,000, 20,000, 30,000, because 1 in 1,000 people did that. Yeah. 1 in 1,000 people bought Dogecoin at 6 cents. They ran it up. And so everybody else says, I want to do that too. I want to turn 1,400 into 40,000 and then take that 40,000 and invest it here, whatever it is, right?
Yeah.
It's a really bad idea for the 99.99% who lose because they hear the story of the 0.01%, but still every day, the door, people keep walking in the casino door every single day. And really that's been the complaint for folks about Robinhood is you're gamifying it. You're making it feel like a game. You're making it feel like gambling.
Terrible.
That, fires neurons in some people who make apps for kids who get them to a certain point in a game where they've got to spend $1.99 to buy, like they understand human psychology. And so it's built into all of us. And so I think you're right. And I think that we've got a lot of people pumped up with a lot of stimulus, and that money is got to go somewhere. And so what you're saying is if that money gets picked up and they take it from their one table, we don't like blackjack anymore because that's dangerous. I'm going to take it to Baccarat or whatever it is, right? Just the analogy, take it for what it is, but you pick it up and you take it to the table that's the real estate table where you go, you know what, this is a little bit more stable. This feels more real to me. I collect rent, I pay a mortgage, I get cash flow.
It's slower. It doesn't have wild swings, right? You went to bed last night and then you woke up this morning, you're down 30% because crypto trades 24/7. And again, people got wiped out, right? You got margin call where you're asleep. They're going to sell your account, right?
You're right.
So yeah, I think again, I don't know that it will happen. It's obviously, like you said earlier, right? More demand in this market is crazy to think about. But I think there will be some people that were, marginally heavily in crypto. They're like, nope, not for me. People didn't do their research, right? There are clearly, I think, some coins that will have functional use cases going forward. But the fact that you could just create a coin, you or I could create a coin tonight if we wanted to, and we could start pumping it. And it's not cool. So I think it's not unfathomable to think that real estate will become more interesting and have more demand, which is just funny to say, in the next 90 days. I just wanted to see if that made sense.
Yeah. I believe it. It makes total sense to me. And really the amount of money sloshing around, you pump trillions into the economy, you create stimulus in all kinds of different ways, people that pad their bank accounts because of forbearance, or they get a stimulus check or whatever, the money is looking for a place to go. And if it comes, out of one asset and goes to real estate, that's more demand. So, as much as, my gut is telling me, gosh, I feel for some of these buyers. I don't want it to be harder. I don't want them to be competing against more people. Could be the case.
Yeah. Well, again, that's why we talk every week, because it'll be interesting. I think we'll see it pretty quick, probably 6 weeks from now, right? When people start to go, they have to collect themselves and realize they just lost lots of money. And then they'll have this moment. It's like, I'm not going back there. That stove's hot. I'm going to go somewhere else. So interesting to see. Any closing thoughts, Matt?
No, I just think that, well, maybe I do have closing thoughts. I say no, then I start to say something. I talk to these folks all the time. And I think for anybody who's in the real estate space, they're watching this for a reason, right? Get yourself educated, because for the same reason somebody might lose investing in something they know nothing about, Dogecoin or cryptocurrencies or alternative coins, you can do the same in real estate. Yeah. But the thing about real estate is, if done correctly, if you educate yourself and get a little bit of bearings first, it's a lot less risky. There's plenty of people that have succeeded. So get out there and get yourself educated, read some books, watch some podcasts, go invest in real estate. It's fun and it's proven. And that's why I tell people too, there hasn't been millions of millionaires in the past for no reason at all. Real estate works.
Real estate works. There you go, Matt. Thank you very much, buddy.